Today we have a lawyer and a CPA guest, Scott Earl Smith. He's a business leader, investor, and attorney who has helped over 3,000 clients optimize their financial lives. So I'm sure you guys have heard me talk about this trifecta of you got to invest your money in deals or investments, the tax and legal side, and then also the infinite banking side, which we do have a lot of e-courses on that. What we're focusing in is on the tax and legal side. So we bring on guests like Scott today so we can dig more into it. A lot of our investors are on this doorstep of, if you've heard the term family office. So family office is traditionally families that have $100 million net worth or greater. Typically, it takes 2 to 3 generations to get there. And it usually will start with somebody's a business owner. But a lot of our clients today are just good savers, and you'll get there over a generation or two. But you're not quite there to having CPAs, lawyers on staff, like the family office folks. So the question that comes up a lot of times, especially in our family office group, is what the heck do we do? We brought Scott on, and his story kind of parallels a lot of what you guys are going through, myself included. So I guess why don't we welcome on Scott, start off with your story, because I think it parallels a lot what people are doing.
Yeah, thanks, Lane, for having me. What we do now with my company, Royal Legal Solutions, I like to refer to it essentially as a multifamily office. So it's a way of like, how can you provide family office style support, but that's appropriate for people that are at the 1 million plus net worth or are making over $250,000 a year in total household income. So that's our idea of who do we work with. But I didn't start there. I actually bought my first business and building actually when I was in law school. Started my third year of my law school, and I found a transmission and auto repair shop that I was able to buy the building and the business for $10,000 in back taxes after graduating to be able to graduate from law school without any debt. And that's what got me hooked on investing. As I was working as an attorney and doing litigation and doing all of that good old back office, grinded out attorney work, I think we can all identify with what that's like in the W-2 world. I was eating ramen noodles and I was putting every dollar I possibly could into investments because my big buddy, like that wrote Rich Dad Poor Dad, he told me like, that's where I live the dream. Where I live the dream is I start making passive income and then I can go live whatever life I want to after that. So that's what I did is I just sacked away money into the investments, got the passive income coming from my real estate. And I did exactly what I was supposed to do, which was I then quit my job and I was like, great, now I'm going to go travel the world. What I didn't realize though, is that, and what they never told me in any of the books was that's actually just the very beginning of a whole new journey. It's not the end of the journey. It's actually just the beginning of a new one. The first wake up call that I had to that was a friend of mine got sued for $3 million and he was really well insured. And I was always told that, hey, as long as I have great insurance, I'm going to be fine. And he lost over $3 million from a single lawsuit because he didn't realize and didn't know that insurance is really just partial coverage. It only protects you against some of the risks some of the time. And so it increased my sophistication. I said, okay, great. I'd always heard about investing in tax. I didn't know about how important like asset protection was. And over time, I learned more about those other.
Before we get into that, one big thing, everybody should have an umbrella insurance, like basic stuff, right? But as we all know, especially recently, insurance companies are not our friend.
They're in the business of accepting premiums and denying coverage. That's their business model, right? So you always want to have the cheapest liability coverage that you can get on your properties, your boat, your cars, everything. And then you want to wrap that with a couple $1 million in umbrella policy. You will pay almost nothing for your umbrella policy. The majority of your costs are actually in this first $50,000 of coverage that you get. And then you'll get millions of dollars in coverage for almost nothing. So you definitely want to get the umbrella policy. But anyway, like my friend though, when he got sued, it was because of a deal that he did, right? So he was under contract for a deal and he said, this deal isn't what you guys told me it was going to be. So he backed out of the deal. And then he got sued for that because he made the classic mistake of owning all of his properties in his personal name and his assets in his name, which is the absolute worst thing you can possibly do as own assets in your personal name. All of a sudden that lawsuit was for a breach of contract. They sued him. Guess what? Insurance policies never cover anything that's a breach of contract action, or if somebody said that you lied to them, I said, fraud, remember, they can lie about you lying to them. It doesn't matter. They can sue you for fraud. Your insurance policy doesn't cover that. If it's a really bad accident, your insurance carrier can just decide that you were negligent or grossly negligent, and whatever was the conditions of whatever, the car, the house, whatever the case may be, and boom, now the insurance policy doesn't cover it. And guess when that happens? That happens when the claim is really expensive. So even if you have an umbrella insurance policy, When you have those $1 million claims, you will actually end up in a lawsuit against your own insurance company to force them to try to protect the claims. Now you got two claims you're defending: one, the person attacking you, and a different claim against your insurance company to force them to protect you. If you don't have asset protection in place, those are some stressful times of your life. If you have asset protection in place, you're resting easy knowing that you have the bulletproof kinds of protection you want to on top of the insurance policies. But insurance is great at being able to get rid of most of the things most of the time, but it's not what truly helps us sleep easily at night.
I want to highlight in there, typically when you get, or any lawsuit, typically they're just going to throw everything in there and also sue a bunch of random people that they can. That's just what you do. And typically you throw in the effort and they're fraud. And that's like Scott says, that's what negates that insurance. As soon as that's in there, I think there's a false sense of security, right? As soon as you get sued for something with fraud, even if it's stupid or not, that umbrella insurance goes away in terms of protection there.
Because the insurance, you got to remember from the insurance company's perspective, they're trying to find a reason to deny your coverage because that's their business model. They're going to find any reason to be able to do that and then embroil you in this kind of problem. But I really have great insurance on all my properties. I have millions of dollars in umbrella policy on all my properties and boat and cars and like everything. Claims most of the time, I want somebody else to just take care of it for me. And that's what I'm paying for the insurance.
Yeah.
But I'm not pretending like the insurance is actually going to be what I'm looking for, which is no matter what happens in my life, I know that I'm going to be provided for financially. So that way I can feel free to live without the risk of that nagging feeling that we all have in the back of our head, which is, what if things go wrong? Am I still going to be okay? Is my family going to be okay? And a lot of what I focus on is, how do I minimize that feeling as much as possible?
We own a lot of rental properties, thousands. And when you have that many and you're the general partner, we tend to get sued a lot because of injuries. We had a guy fall through the ceiling because he shouldn't have been there. People come on the property, which I think is the exact reason why you invest as a passive investor. So you're not on the hook for that. Yeah. But a lot of times these lawyers, they just like to get at the insurance money. So they know how to play the game. For us, it usually takes care of most of those frivolous lawsuits out there. And it's silly. It's unfair. I don't think it's right. Like these
can actually be different at different levels of income and asset classes and how that you have your assets structured, about why somebody would target your insurance policy versus like an asset. So like there could be cases in which that the insurance company like won't pay for whatever reason. And so then they're looking at what the pool of the assets can be at that point. And so a lot of times with properties that you're talking about right now, I bet are like inside of like the commercial space. And then those like usually pursuant to like lending restrictions is that you've already had to compartmentalize each one of those assets inside of its own LLC, right? So then there's a limited amount of equity in that. And then there's an insurance policy, which is really different than what I see for most of the clients that I work with, where they say, I actually have tons of assets from my cash, my syndications, rental properties I own, et cetera. They're all inside of my personal name. So now there's no compartmentalization of each one of the individual assets. And there's a huge amount of equity. So yeah, if they can get the easy money from the insurance company, a lot of times they're going to do that. But if anything happens with the insurance company that keeps that money paid, they know they have a second avenue of recovery that's juicy. And so I think you're right, Lane, like 100%, like you're right. Do lawyers want easy money? Yeah, because they got bills to pay just like everybody else. But from this side of the fence, as like a client looking at it, that is inside of that 1 to 5 million asset class, that the number one problem we run into is we want the insurance, but we also want the compartmentalization of the assets, like just like you have with those commercial properties. That way we know that no matter what happens, that's whatever decision somebody else decides to make about what they're going to try to do to us, that we're always going to be okay. And that's what we're really trying to target.
A couple of different use cases there. So I used to have this dog. She was pretty shy. She didn't like other dogs. And when other dogs would come and socialize with her, she'd pee to make them go away. In a way, or if you want to use the analogy with the octopus and Squid Ink, similar, right? We've got 100, 200 plus unit apartment complexes, and we keep it inside of an entity and itself. And that's why I highlight what Scott went over. The exposure is limited to that. So for a sophisticated or even unsophisticated lawyer coming after that apartment complex, they're not going to get at anything because it's some sort of compartmentalized there. Really, the only thing they're going to get is the Squid Ink in a way, or the insurance policy money, which typically is maybe a few $100,000 payouts pretty easy for them to get, sadly. I don't think it's fair or honorable, but whatever. That's just what lawyers do. Those are the big commercial deals.
Yeah.
We as general partners have to worry about that. But let's now segue into the individual out there, like you out there who are $1 to $10 million net worth. Maybe emulate what we're doing. We're putting each individual asset or X amount of equity into an LLC that's compartmentalized. But as Scott says, a lot of people just quite frankly don't do that. I personally didn't do that for my first maybe 5-10 years of an investor myself. I was under $1 million net worth, so I was broke. But maybe let's continue on, Scott. Just that we've differentiated between the two use cases.
Yeah, perfect. And I gotta tell you, like, I barely identify as an attorney. It's more like the way I view myself now is really saying, like, the questions I'm really interested in is like, what is the most efficient and effective and repeatable ways of how do we scale to financial freedom and then bulletproof it so that we can go live the lives that we want to live? And that's really what I think is why do we do all of this stuff is 100% because we're actually looking for a different life experience. We just need to make sure that there's enough gas to put in the car so we can go enjoy the road trip. And how do we make sure we do that? At the point of life wasn't to acquire as much gas as we possibly can. It was just to make sure that we have enough so we can go do that. So we have the insurance considerations that we just talked about. Then there's the next level to ride up the elevator, to be inside of the asset protection elevator, as it were, right? Well, your next stop would be inside of compartmentalizing each asset, right? And so that would be, how do you take each asset and then bucketize it into its own LLC structure, which is really expensive to do if you do it by individual LLCs and has like a bunch of maintenance that you have to do as well as costs. But you can use things like series LLCs that are formed in Delaware, Texas, Nevada, or Wyoming that have strong charging order protections that will allow you to essentially create an infinite number of LLCs for free. And that way you can actually shrink down each bucket to as small as possible. And now this is really different than what you're going to hear from what Lane referenced, right? And then what you'll hear from a lot of people out there that say, I think I'll just have $1 million in equity inside of each LLC. Well, my philosophy is if I can protect it and compartmentalize it for free down at the smallest level, because I'm going to use a series structure, then why not do that, right? Are you familiar with that kind of strategy, Lane, with using the series LLC, or do you teach on that or have opinions on that?
Yeah, it's a little bit newer, right? It definitely is a more of a cost-effective way of doing it. I guess maybe the question would be, at what point would you trigger using just the more traditional, more costly LLC structure? There's so many different factors, but what's your general threshold to
It
give people
actually,
an
for me, it
idea?
depends upon asset class. So if I have a client that's coming in that's doing lots of commercial properties, then we know we're going to have to set up individual LLCs for that client anyway. And so then we just won't really worry about having a series LLC unless they have lots of 1 to 4 unit brick and mortar type of assets.
They'll dig there. Some people call commercial properties anything more than 4 units. I don't call it a commercial property unless it has 50 or 100.
What is it for lending purposes? Because traditional lending only goes 1 to 4, right? For Fannie Freddie. And then we have to do some type of different kind of lending.
Yeah, there's a no man's land under 50, 100 units. I don't know where they're getting these janky loans from like little community banks, but I guess maybe what's the trigger here?
So the deal is that like because what we actually want to do is take that property and we're going to finance the property typically inside of somebody's personal name, because that's where we're going to get the best rates is using those types of conforming loans for the majority of clients that are in the 1 to 4 unit space. And then we'll transfer that property into a land trust, which will avoid any due on sale clause issues of the mortgage. So we can leave that cheaper financing in place. And we'll also produce anonymity of the ownership of the asset. So that land trust, we call that Land Trust A, would then be owned by Child Series A of the Series LLC. And the parent Series LLC would be on top of that. And that's the way in which you would be able to get the cheapest financing, create anonymity with the ownership of the asset, and have it compartmentalized in an extremely cost-effective way.
Yeah, and I probably should know this, but normally we just go after the big stuff where the loans are non-recourse, so there's no personal component in there. So that's probably like where this kind of weird threshold, maybe it starts at 20 units to 80 units.
It really just depends on like when the client comes in with, here's a list of assets. We look at, okay, what's the type of lending we have there? A lot of times if they had that type of non-recourse set, they're already going to have an LLC in place for that. And we'll say, cool, let's just leave that in place. We'll just use that as part of the tree structure. And then we'd only be using series LLCs if they were like, I got three properties that I have all on my personal name. What should I do with that? You can either lump them all together inside of a single LLC, or you can get better protection if you use a series LLC and then trust structures to create anonymity in the ownership of the LLC and anonymity in the ownership of the asset.
Yeah. I think from my perspective, I'm just like, I'm not allowed to talk about strategy apparently because I'm not a certified financial planner, but it's after a certain point. I don't know if that's 3 rentals or 11 where I got up to, but it's, dude, do you want to become a freaking landlord? Just be a passive investor and you
Yeah.
don't really have to worry about this stuff. What are you doing buying an 8 unit at
I'll
12?
raise my hand on that. That's where I went to. After I like figured out how to do syndications by joining like Tiger 21 and like high net worth like men's groups that were investors and learned from these other entrepreneurs about here's how like top tier investing works. That has like a blended ROI of tax benefits and the assets. I liquidated all the rest of the stuff in my portfolio besides things that I was like directly wanting to use for my lifestyle. As I pushed it all into syndications, except for some stuff that I have like a little bit of crypto, some cash, a little bit in stocks, but I'd say probably about 60% of my portfolio is inside of various syndications right now.
I'll throw in a little nuance to that is Scott's a business owner, right? Lawyer. And his highest and best use is in that business. Now, the people who are in Tiger 21, I think you need 20 million of investable assets in a group like that. You ain't got no salary guys in there. Every one of
Right.
them are business owners for
Mhm.
sure. So in that case, yeah, why would you dick around with little single family homes or 8 units or
Right.
even a 20, 30 unit, right? I think that's an obvious one. Buying some of these more temporary solutions might make sense if you're working a day job or you work a business, but it's an easy business that you don't really want to accelerate or you can't accelerate. That's just
Right.
part of the game.
Scaling a business is hard, man. Like I don't, that's not for everyone.
Yeah. And
And
it could be could just be in a declining market for all we know. That's the thing. Like to me, real estate, when especially we're in a smaller realm, you have no advantage.
yeah,
There's really not much you can do about that.
yeah, it's not going to do a ton for you. And it usually will suck up way more time and become more like more headaches. I can just share with you like my perspective. Here's what I advise like all of our clients that come in like underneath like our elite programs where we do the full system turnkey type advisory. A lot of people that were coming in for us are like making 250K to about 2 million a year. Like those are the income ranges. So a lot of those people are doctors or high income earners that are working inside of tech. Once you start making enough money, there's enough money you can save on having really good tax strategy that it pays for all of our fees. So that's the way that we bracketed ourselves to do it that way. But what I always look at it for people is say, listen, if you try to get into like physical properties, you're in a game that is you're about a third or less of the returns that than if you will learn how to do syndications and how to properly underwrite deal operators and deals and working with our community on what deals people are getting into, et cetera, to start getting yourself up to speed on like those types of asset classes. If you can get to the place where I can make better returns with less engagement with the asset, that's actually the immediate delta inside of how you improve your life. And it sets you up for the immediate benefits and it sets you up best for long term. The cost is it takes time to get educated on how to do syndications appropriately to make sure that you don't lose your ass because most syndication deals are actually not good and most deal operators aren't good. If you eat that cost up front on the education, it actually will give you the immediate life benefits of helping you place your money better. That money will be working for you better, at least as good, typically, as investing in like 1 to 4 unit properties, and will give you much better tax benefits and much better payoffs when the deal exits in that typical 3 to 5 year time period. So, can we wrap our mind around saying we're going to eat the frog, right? And so if we can't eat the frog, then I'm going to say, great, then go buy some 1 to 4 unit properties and you can grind it out until that wears you out enough to say, I'm ready to go eat the frog.
Yeah. Or jump from the first floor to the second floor of the wealth elevator. As somebody who's gotten over $2 billion of assets and gotten over the hump, part of that is luck too, good market timing. If anybody is under the age of 40, I'm going to use that age arbitrarily, I guess that's young, right? And you want to be a general partner, I have a hidden video for you to telling you all the ridiculous stuff out there of these educational groups for you to do it. And first of all, I don't know why you're listening to my podcast, right? Like we're accredited investors. So maybe we'll switch page to that, Scott, right? If there are people who are like, all right, I get it. I don't want to own more than a few rental properties. It's too much a pain in the butt. I want to jump on scale with other people, with other operators, because that's what real estate is. It's that those who have scale, who have hundreds and thousands of units, have a huge advantage than the small guys. And I'm just going to invest passively and also in other types of investments, private equity, et cetera, which is why we've transitioned to that a little bit. Like how would you advise like a normal structure for that, right? Like I'm putting my LP placements. Do I do my personal name? Do I put an
Yeah.
LLC? What's a standard plan? Of course, every situation is different, right?
Every situation is different, but 99% of everybody that comes in is actually exactly the same. It's at your stage of the journey and how they need to get to the next stage of the journey. 99% of the transition of those stages will be exactly the same for everybody.
I just say that to make people feel good, but you're
Yeah.
right. There's only two or three guys, right? Two or three different cases, to
All
be
this,
honest.
if you really look and study money stuff and help enough people, you realize that it's actually just about all the same, right? And everybody's like, oh, it's like, no, it's about the same if you just follow a system and process. It's like scaling a business in a lot of ways. It's businesses are businesses, actually. If you really understand businesses, none of this stuff is actually rocket science. But anyway, what should I do if I'm starting to own more syndications? My personal philosophy is you should own as little as possible inside of your personal name. Maybe the bank accounts that you have, they're getting your just petty cash for living your life is fine. But everything else, let's have anything that you would cry about if you lost it should be in a protected structure. So that's your litmus test of like, how much do I need to put in there? Do you care enough about it to protect it? And then after that, then it just becomes like a question about saying like, how much do I need to compartmentalize it? And what's the most efficient way of doing that? We talked about series LLCs for the 49 states. If you're living in California, then like a Wyoming statutory trust or Delaware statutory trust is going to give you series compartmentalization, the same as a series LLC, but without having franchise tax issues.
And that's the $800 one that California dings them. Is that the reason?
Yeah. Yeah. Per LLC, California will ding you $800, right?
Series.
If you use a trust structure, though, like a Wyoming or a Delaware statutory trust, because it's a trust, there's no franchise taxes associated with it. But series LLCs, they count all the individual child series just like LLCs. So there's no benefit to it from a cost avoidance standpoint, which is typically what's most important for California-based investors when they're trying to cut costs and create efficiencies on that front, right? Always something I come back to. If like, why not be more efficient and donate the money to feed children? It'll probably make you feel good, and it's a lot better than just giving it to the California State Franchise Tax Board, right?
That was a
But in
joke, right? That was a joke. I think that was a joke.
yeah,
Right?
I like feeding
Yeah.
children is a good thing to do. I would rather do that than just
Yeah.
go give more taxes to the state. When you look at what assets do I need to compartmentalize, you want to look at to say in a limited partnership interest inside of a syndication as typically viewed as an extremely low risk type of investment, right? The only way that's going to blow up on you in a way that you're going to lose more than your initial contribution is if in some just really horrific type of scenario, right? Like some type of toxic issue that bleeds out to hurt the community or something like that. In that case, the courts don't provide any legal protections, any shields of all of these things put together. And like, you're just going to get got, right? So for the majority of our clients that'll look at it and say, hey, if I just have a single LLC that holds all of like those assets, do we say, is that fine? As long as all my limited partnership assets are my syndications? So yeah, that's okay. If you wanted to go to the extreme of what you could do for that type of protection, as you'd say, yeah, you could compartmentalize them all. And then if something does happen where they pierce the corporate veil inside because the GP did something or didn't do something and there was a horrific accident, then you could only lose that one investment. They couldn't touch all your other investments. So you'd want to compartmentalize it. But I only typically advise the compartmentalization of those things if we can do it for essentially zero extra cost.
One thing I'll mention, I saw the other day, I'm not giving legal advice to this guy, but like he had an LLC. He was super excited because he had an LLC. So he felt all official. And then he was putting his LP holdings in his syndication deals, but then he was also running his business out of it. And I was like, dude, I'm not a lawyer. You should go talk to your lawyer about that because you probably shouldn't do that, right? Because you're commingling dirty assets with safer assets. So there's something to point out there.
Yeah, that's another way of like compartmentalization, right? So your asset holding company should be its own independent structure that's entirely separate from anything that has any operational function associated with it. So even like in that case, right, that's obviously bad, right? Because you're running the business out of the same LLC that is holding other assets. But let's say he was even more sophisticated and he then said, oh, cool, I'm going to set up a separate asset holding company. I'm going to move my syndications and my stocks and my X or cash and whatever. I'm going to move it into that LLC. And we think, cool, that's great. But then in talking to that client, you might find out, says, oh, but I actually have a bunch of like vans and vehicles and I have a bunch of equipment and whatever that's all part of my business and that I actually own all these assets. And so where are those? Oh, it's in the LLC with the business. So no, okay, great. We actually need a separate LLC that will then own all of the machinery and the vans because those are all assets of the business. Your business needs its own asset holding company, and then your business needs to lease those assets for its use. So that way your business can get sued and you can shut down that business LLC and restart a new one and then enter into a new lease with the business asset holding company.
I guarantee a lot of business owners don't do this. Even people with a beta over 1 million, 5 million don't do this, right?
No, I've never run into a client that's come in with us that meet our qualifications of making over $250K a year that we haven't saved at least $25,000 to $30,000 a year in tax. At the higher income numbers, it gets really stupid and ridiculous. It's six-figure tax savings. Nobody has their asset protection stuff set up correctly. Nobody has their estate planning stuff set up correctly. A lot of times they set up their estate plans, but they don't look at them every year. It's not connected in with their asset holding company structure. They don't have all of the assets inside of the trust. And nobody actually knows two critical numbers. One, what is my timeline to financial freedom if I follow the plan? Whatever is the investing plan. How long is it going to take me to get to where I want to get to, where my passive income is going to equal my expenses or exceed it for a lifetime? I think that's the first critical number you have to know. And the second critical number you have to know is what is the exact investment that I'm looking for to be able to influence my key financial indicators, my net worth, my total tax liability, and my cash flow. Do I know exactly what investment it is that I'm looking for? What kind of play is that? Do I need more tax savings? Do I need more cash flow? Do I need something that I'm just going to buy and hold and it's going to pay me back in 5 years, but I get no tax benefits or cash flow for it? It's just a big net worth play. And then the last thing is people also don't know, where do you need to make that investment? Is that an investment you need to make in your personal name, or is it an investment you need to make in some type of tax protected vehicle, like a private foundation or something like that?
So like this is the classic case, right? A guy running a business with $1 million EBITDA has all his stuff, all his vehicles in one holding LLC, which is good, right? On the most part, maybe should have a couple for the vehicles. But then you have on the other side, the non-business owner who only has LP syndication holdings, who pretty much has no liability there, has like a LLC for each thing, right? That's like the classic example that I guess the mistake that people are making.
Right.
But yeah, I mean, that's something new to me. I just learned that. I mean, is that why, like when I work for Fortune 50 company, they would just contract out all the vehicles? I think they used
Right.
Danella at the time. Is that the reason, or is it just more workforce planning, or is there a liability component to that, or?
The great part about it is that if you're always going to spend more if you're leasing something from a third party, right? But now your operational load of having to maintain vehicles or something like that actually really sucks. Like those
Yeah.
components of businesses are actually terrible to run and are really difficult to do, right? And do it really well. So typically you want to outsource that. But inside of any other like business structure, what you want to be able to accomplish is that the entity that's going to get sued, which is the one that's interacting with whatever your customer base is, right? That's the one that's getting sued because the deal went bad in some way. Is that what you want is that business to own absolutely nothing. And that if you're the business owner, you personally should also own nothing, right? So that way, if anything happens in your personal life, from a car accident to that exceeds the limits of liability of your car insurance policy, or breach some type of contract or a fraud issue, or if anything happens inside of your business, you know that like you have pretty dang close to absolutely bulletproof stuff set up, right? Because you got insurance policies, you got all the assets stripped out of whoever they can actually reasonably sue, because they can only sue the business or sue me as like the individual, but they can't get to anything that has all the assets. So as long as the assets are protected, we're back up and running in our life super fast, whether it's your business or you. Once the assets gets tangled up inside of a lawsuit in some way, you're totally screwed. Because now everything can get like, starts getting, lis pendens on your properties. You can't sell them. Bank accounts start getting frozen. All kinds of stuff starts happening that screws with your life. And the only way to protect against that is to be proactive and getting everything set up ahead of time.
So I think we're on that second floor, third floor of the wealth elevator right now. Maybe that's a good transition to getting to the third floor, fourth floor, penthouse level and above, when we start to talk about irrevocable trusts, offshore trusts, things like getting outside your name, if you want to talk about that a little.
Yeah. So like when we start to get into the asset protection structures, we want to anonymize our ownership of our entities and all of our properties or our assets. One, it's because if somebody ever looks to sue you, we want to make it look like you have as little assets as possible. And another way, it's to be able to increase the level of doubt or certainty that they have that if they sue you, they can get to your stuff. because the litigation only moves forward for most cases if they're sure they're going to get paid, because it's really expensive. So the second reason that we want like those anonymity pieces in place is because it's for privacy concerns. Like if for a lot of people, as we start to make more money and have more assets, like weird us out that people can find out like where all of our money is, right? And what kind of things that we're doing, especially if you're making your investment inside of like an LP structure and all the LPs are actually interests are all shared with each other, who are the other LPs. You start finding out that people are actually looking at those sheets and finding out where are the members of the investment communities putting like their money inside of different deals and from their own network, right? And they can start to map out your net worth, where you're investing, et cetera, right? So if you're on the more paranoid side, you're thinking about stuff like that, right? The higher your net worth gets, the more privacy concerns like typically can come into play.
Like friends or family snooping up, or your coworker Google stalking you, trying to see what you own, and then they're all pissed at you at work because you're not working as hard. And that's why the anonymity makes a lot of sense. But I will say that once you get sued, or if you were to sue anything, you get into discovery, and then it doesn't really matter at that point. You got to disclose. Of course, unfortunately, the people you might be suing could just fight dirty and just lie too. Not to say that they can't do
There's
that,
all
but
kinds of things. We at least get to have a fight about it. And at least it wasn't there for them to Google. Like we actually made them had to work for it, which means that they might have not taken the risk of the cost to be able to find out. So it could stop the lawsuit before it starts, just because it makes it a little bit more difficult than otherwise.
I
And
think that's the thing about the lawsuits. It's like when we talk about frivolous lawsuits and legitimate lawsuits that need to be settled, but it's, I think, the frustrating thing for at least myself, or honing in what people are thinking out there. It's, man, it's like you haven't done anything wrong. Those are the most frustrating ones that at least you want to take care of, that in a way you want them to figure out be what you have, so they don't waste their time.
you
Go
can
ahead and
always disclose whatever you want. It's like these things too. People are like, "Are you trying to keep people from getting paid on lawsuits?" And I'm like, if somebody got hurt on my property, let's say that I'm 100% legally protected. They're not going to get any money off of it. That's very different than being, and it's very easy to be generous from a position of strength. And it's very different than just actually being weak and getting bullied because you didn't take the measures you needed to really make sure that you were going to be in a position of strength.
Yeah, my whole, like, maybe this goes more into like negotiation tactics, but when you have the upper hand, like you got your asset protection all in order and you haven't done anything wrong, or you're in a negotiation. I guess maybe the good example, remember Zelensky and Trump had that little, they were talking
Yeah.
on
An oval,
TV,
right?
seeing how heads of state talk on live YouTube television. That was so weird.
Wow.
He had the positioning. He has the freaking United States of America military and money behind him. He had the positioning. So when you do that, to me, typically what you do is you throw your trump card. Nothing about the trump card, but like when you play the card game, throw out the best hand.
Yeah.
Just like negotiation in deal making, if you have the positioning, you just throw out the best. You don't hide it. There's no game. Some people have different strategies, one way or the
Yeah.
other, right? Some people say you hold back the trump card till the end, and when you need to win it. Okay, maybe a soccer analogy here, right? I don't know soccer, right?
Yeah.
But like I think you send 5 guys up there, right, for the penalty
For
kick at the
penalty
end,
kicks. Yeah.
right? If you have by far the best team, maybe the strategy here is you send your best 2 guys. You send your Messi up first, right? To crush their soul in a way. Actually, I don't know if that's the strategy they do in soccer. It might be, but I think people get my point, right? Like in a negotiation or lawsuits, if you haven't done anything wrong, nothing to hide, then you just throw the trump card and see what
Yeah.
happens. It is one way of playing the strategy.
It is. There's a lot of ways to play strategies, right? And it gets really situationally dependent, right? So, like our clients, whenever they get sued, we typically are handling about a lawsuit a month for like our client base, and then each one of those can be different. Sometimes people are a lot stronger in their case, and sometimes they actually screwed up, right? And they're like, "Ah, you have a lot weaker defense because of XYZ thing that you did. We didn't advise you on, and you did."
Yeah,
Uh,
piercing the corporate veil or using the LegalZoom cheapo LLC thing.
Whatever that, there's a myriad of those things. Not maintaining it correctly by not doing the proper like yearly filings, not having accounting records for it, not doing the things need to be done. And like a lot of litigation pieces, it ties into like money actually solves all of our problems for most of the time, right? So there's a proper foundation that we need to get set and a proper strategy, right? So if you think about it as building like a house or like a castle, we need the foundation is going to be like your legal strategies of like your structure. Those are your beams, right? That are going to come in to build a house. And then we're going to build like around that. The best money you can possibly invest and get is actually tax savings. There is no better investment that you can make than investment in tax savings, because it's the only investment that has a guaranteed return, because it's the IRS is going to get that from you every single year. You know exactly what you need to do to win that money to make that return happen, which is whatever the legal tax strategy is that's around it. And traditionally, that has the highest ROI of anything else you could invest in. Your tax saving is going to have the highest ROI of anything else for like dollars spent for that kind of high level professional advice. And so then we start to say, cool, that tax savings is actually going to give us cash flow, right? And now we can take that cash flow and then we can turn that into investments, typically inside of like either, I like to invest primarily in syndications of like real estate or like oil and gas syndications, somewhere that gives me between an 18 to a 30% return on the money, like a 9% pref, 7 to 9% prefs typically, and will give me somewhere between 75% to 140% depreciation, depending upon what's like the nature of that deal. And then, okay, now I'm building like my castle. Castle is
It's
really important
the idea of a good defense is a good offense in a way.
because if I have the cash, I can fight the litigation. Like a litigation is a war machine. They're really expensive. You typically need about $250,000 to go fight like a full blown litigation against a formidable opponent, right? Where if both sides aren't cash capped, right? You need about 250K to be able to fight that. Most litigations between mom and pop people, those are going to cost you between 30 to 50,000, right? So that tells you like what your budgets are. So the better you can get at tax and the better you can get at investing, the faster you accelerate to your financial freedom. But also, if you're ever under attack, you actually can fuel your own war machine to make sure that you're protected, regardless of whoever the enemy is going to be. And if you can pull together that whole plan and you can execute on that plan, the thing I tell people is you will not know what to do next with your life, because you'll get to a place where you'll feel secure. You won't need to be worried about money. And you'll start to run into the next crisis of your life, which is, what the heck do I actually enjoy? And where am I really going to spend my time that I actually care about? And it's like, okay, great. Now we're into the peak 2 of what living is, right? Because we've solved the survival problems of wealth and money. And now we're on to the next phase of life. But while we're all inside of peak 1, and like in this conversation, cool, we need to get really good about how to do peak 1, like repeatedly and systematically.
Yeah. And I think that maybe applies to people who never invest in anything. They just are always constantly frozen in fear, not only from going into investments, but also fearful of lawsuits and stuff like that. And it's exactly to your point. If you're worried about lawsuits, then go out and invest and make more money.
Yeah, that's the deal, right? So like when I talk to people that are like, oh, I'm a contract doctor, for example, right? Contract doctor's coming in, he's making $800,000 a year. And that's his thing, is I'm managing all of this stuff with like my rental portfolio or whatever the case would be, or I just have money in my stock market that's like underperforming. It's pretty bad. But in most all circumstances, if we can use our investing dollars to get better positioned, we will eventually look to say we will have freed up enough time and energy that we can then use that extra time and energy to create more dollars. Because there's no higher ROI above tax savings than what it is that you can actually create with your time and energy, right? That is the number one resource that has the very highest ROI is your time, because your time is how you get educated. Your time is how you learn how to like leverage to have impact. Your time is how you create something to help other people. It helps you make more money. Everything is actually built like on time. And then after that, there's like tax savings or whatever, but I don't coach on like business development and how to do that side of it. I'm glad you brought it up because that actually is the truth.
Yeah. More money solves problems. If you are that guy who we talked about earlier, likes to own a 20-unit apartment complex and get sued every year after year with that many rental properties, more money can allow you to go buy a triple net deal where you make a fraction of the ROI, but have maybe less than 1% of the risk profile.
I think that's 100% the way to go, is that if you can find those types of deals and reposition your investment mindset. People will typically also have some type of reserve that they'll keep inside of the stock market, maybe 20%. They'll have something that's in high risk stuff like crypto, maybe 5% of their portfolio, maybe 5%, 10% in cash, depending upon where they want to be. The very best investors that I see that do well long term have really deep relationships with operators, with groups of people that they're investing with, and that will have most of their cash deployed, right? They like to have the money in motion most all of the time, right? There's very few of them. Most of the people that are really consistent over time will do that. And then they pick stuff that's like the most boring of asset classes. Like what you talk about, Lane, which is like, where's the apartments that are like $700 to $1,400 a month? Like, those are my blue collar guys. They have to have a place to live. That's not going anywhere. I want to own wherever they're going to live.
Yeah. And I think I've talked about my investment thesis here this past year. With interest rates not going anywhere near where it used to be this last decade, we've had a changing of the guards. Not saying that I'll never invest in real estate again.
Right.
I still will. We just did one recently, but this is kind of why we're looking to take on more risk and do more private equity. Exactly to that point earlier is we got to get after it, right?
Yeah.
We can't just sit around and do nothing. If I had a gazillion million dollars, then yeah, I probably could. But
So you guys are looking a lot more into investing into like small business or small business funds.
we've done a few of these already. And I think the important thing, like you said to your point earlier, is like you got to find the right operators. We operate apartments and multifamily developments, but that was where I got burned. I had 80-90% of my net worth into that stuff. And in the correction of 2021 to 2024, I got killed. It also got me to where I was at, right? I live by the gun, die by the gun, essentially. But I think for investors, like where the puck is, what got you here isn't going to get you there, is at least what I'm just, everybody needs to make their own decisions out there. These are my decisions, best with the information and community that I have. But
Yeah.
so Scott, you help people, you set up their tax and legal situations, right? Maybe talk a little bit about that offering and how does it kind of all work?
Yeah. So what we do is we're essentially, my company, Royal Legal Solutions, is we consider it to be like a multifamily office to say, what are the things that people will typically need at $50 to $100 million mark in terms of CPA, CFOs, attorneys, paralegals, et cetera, like the full gamut of that team. And then how to fractionalize it in a way that the people that are the 1 million plus can afford and that it's appropriate for them. And it's a turnkey service, right? So it's the strategic outlay with all of the build, right? So the only things that we actually don't do for our clients is actually say, you need to place this amount of money into this exact investment because we don't have a series licensure to do that, right? So we back off from that, but everything up until that point, we do well with. And we partner with like funds that are like yours, Lane. So that way all the people that come into our orbit, they can say, great, it looks like you're looking at these deals here with Lane or whoever else that is inside of like our nexus of high quality screeners for investments, et cetera. Cool. Let's plug that inside of like the investment models and tax models so we can see what is going to be the impacts that you need to do. So your attorney that you're assigned to on the team is going to build your asset protection. Your CPA, CFO is going to help you on all like the tax strategy and all the financial projections, review the investments, place the money, look at your risk associated basis with your portfolio to make sure you're appropriately diversified. You don't want to be too heavy in any one area, even if it's kicking ass, because that can reverse at any time, as you just shared with us from your own personal experience, but that happens all the time in all kinds of different ways to people. So you can always know what's getting up to speed. Usually within like about 6 weeks is what it takes to go from wherever you're at now to like full blown CEO of your own wealth building company that we support and help you manage and run.
Yeah, definitely an underserved community. And I think we think the same way, right? The people on the second, third floor kind of above the wealth elevator. I something you said you guys don't do is like the deal side. So we have our deal review offering. I think people can go to the wealthelevator.com/review. If you guys have a deal and you want us to run the numbers, P&Ls, rent rolls is what we need. We'll run it to the analyzer. But because I don't want to get sued and be blamed for your investment choices at the end of the day, we try to make it very educational. That's what it is, just education. So we sit down with you, we go through the deal. And the idea is you start to learn these things by actually doing live target practice as opposed to going through our syndication e-course, which is a little dry and academic. Some of you guys like that kind of stuff. But to me, I learned by looking at real life deals that I may actually invest in. This is also a sly way that we actually look what's out there too. So hopefully you guys don't just bring us the same deals with just the best marketers putting out the deals. But we're just taking in the inputs and looking in a snapshot today, forward-looking statements. What does it look like today? Right? Are they using the right assumptions on the deal reversion cap rate, rent increases per year, et cetera? And then we, like the deal we just looked at the other day, I did this in our inner circle group with the operator had it at a 2x equity multiplier, 100% return in 5 years. But when we underwrote the deal, we downgraded certain more lofty assumptions. It came out to a 1.1, 1.3 equity multiplier. So no bueno there. But yeah, I think these are normally, if you're a family office, you would have an underwriting guy on your staff. and a nanny, and you would have a Scott, all these service providers, right? But the problem is, what is the dude under $20 million to do?
Right.
Then to piece
That
it together.
that's what I think they need is if they partner with companies that are like yours, right? And from that, they can get a discounted family office, right? Like they get all the functions that they actually need out of the family office where nobody's taking on too much liability. They don't need all these full-time staff. They can't afford that. And this is how you like leapfrog it. Because the impacts here are like not trivial, right? Like the difference in being able to get comfortable with how to use, like, for example, a private foundation to be able to make an investment with is for a lot of our clients and like double figures tax savings, like somewhere between $10,000 to $30,000 on the first year inside of tax savings. And that all of the income that they are able to generate inside the private foundation is only taxed at 1.39%. So when they take that in comparison, if I had that investment inside of my personal name, now you're paying ordinary income tax on it. Maybe that's 20 to 30% versus 1% inside of the private foundation. Then that's a monster difference. And what is the total return after tax? When you're playing the game of, I need to accumulate the net worth, and then I'm later going to draw a salary off of it, which is most people that are in that 1 to 5 million range. They typically want about $5 million in assets to pull a big enough salary off of their investments to be able to fund their lifestyle. So I just want to throw that in as that last piece of it too, is that asset class that you're working with, Lane, that's like in the small business becomes hyper sexy whenever it actually has the proper tax structuring, tax protection structuring combined with it, with the knowledge about how do you actually pull the money out of that structure and in the most advantageous way as well. So I want to throw out your radar in for everybody on here if they haven't put those pieces of the puzzle together yet, because those are really sexy pieces.
Thanks everybody for jumping on. Thanks, Scott. If you guys want to reach out, shoot us a team at wealthelevator.com and get you connected. And we will see you guys on the next episode.